The recent turmoil at Credit Suisse, a leading Swiss bank, has caused shockwaves across the global financial industry. After days of emergency talks between Credit Suisse, UBS, and Swiss regulators, a deal has been agreed upon that will see UBS take over Credit Suisse. The agreement was supported by regulators as the best way to restore confidence in financial markets and manage risks to the economy. The deal has been praised by global financial institutions, including the European Central Bank and the Bank of England. But some analysts remain skeptical about the finer points of the arrangement. Credit Suisse has faced a series of major issues in recent years, including a money laundering scandal and exposure to Greensill capital, leading to the loss of billions from the bank. The recent failure of two smaller U.S. institutions caused the bank to suffer further losses. Shareholders were not given a choice on the deal and will receive one UBS share for every 22.48 shares they own, valuing the bank at $3.15 billion. The Swiss government will provide a guarantee against potential losses worth $9.6 billion to reduce any risks for UBS. Despite previous scandals, Swiss banks were known for their reliability and strength. But the recent system that allowed a 167-year-old bank to fail in a matter of days at the cost of jobs and share value loss could cause significant reputational harm. This inaction resulted in extensive damage to Switzerland's entire financial sector and Europe's too. Some Swiss are now questioning whether those responsible for preventing Credit Suisse's collapse were not paying attention. And tough questions will need to be answered soon. The possibility of uncertainties remains despite the arrangement's potential to put doubts about the viability of Credit Suisse to rest. Some analysts still believe that the devil will be in the details as finer points are worked out over the next few months. As part of the arrangement, Swiss regulator FINMA announced the cancellation of 16 billion Swiss francs of Credit Suisse's extra Level 1, AT1, bonds. Some investors fear that this move signals further contagion risk for global credit. This was a significant focal point for analysts evaluating the potential consequences of the deal. Despite the risks associated with the deal, UBS chairman Colm Kelleher believes that Credit Suisse is an attractive asset and a necessary crisis rescue. UBS will be winding down the investment banking division of Credit Suisse, and it is too soon to discuss positions. Established in 1856, Credit Suisse has been a leading institution in the Swiss banking sector for over 167 years, surviving the 2008 financial crisis without a government bailout, unlike its rival UBS. However, Credit Suisse's recent issues have threatened its viability and reputation as a reliable and strong Swiss bank. Thank you for joining me today.